Hello and welcome everyone. Thanks for joining us. Today we're going to be talking about the world of uranium, and we're joined by three stalwarts of the industry. We've got Brandon Munro of Bannerman Energy. We're joined by Wayne Hiley of Peninsula Energy and Siobhan Lancaster of 92 Energy. Hello everyone. Why don't we start, first of all, if you could just give us an introduction to your companies. Brandon, we'll start with you, if we may.
Thanks, Matt. Brandon Munro. I'm the CEO of Bannerman Energy. We're listed on the ASX and we're developing the Etango 8 uranium project in Namibia, just finishing up a definitive feasibility study. So I've been there for about 15 years, and I've even, for my pleasure, had a stint of living in Namibia for 6 years.
Hello, I'm Wayne Hiley. I'm the CEO of Peninsula Energy. Peninsula is also ASX listed. I reside in the United States. I have a 30-year plus career in uranium production, and Peninsula Energy today is gearing up the Lance project in Wyoming for a resumption of production.
Hi, my name's Siobhan Lancaster. I'm the CEO of 92 Energy. 92 Energy is a uranium exploration company with assets in the Athabasca Basin. We recently discovered the GMZ zone at our Gemini project, and we're currently awaiting assays on the recent winter 2022 drill program.
Well, there we go. A real smorgasbord of the world of uranium. We've got an explorer, we've got a developer, and we've got someone who's getting into production. So, chaps, I want to kind of go through and help people with kind of the life cycle of a uranium company. But first of all, we can't avoid the macro tensions which are going on at the moment. People are a little bit excited about SPUT listing on NYSE. Didn't quite work out from them. What do you make of it, Brandon?
Not unexpected. It's disappointing, and the market will take it that way. But in the meantime, SPUT has established remarkable liquidity on the TSX. Remember, they've still got a US dollar unit that they can issue on the TSX. And what we've learned since they took over UPC last year is that most big money, most institutional money, is quite happy to get their access to SPUT through that US dollar unit on the TSX. So I saw a New York Stock Exchange listing as a bit of icing on the cake, and probably far more important to retail investors, if you like, the Reddit crowd, rather than the big money that actually moves the dial with SPUT. And bear in mind, they've still got an OTC listing. So most retail investors in the US who want to buy SPUT can do that through the OTC. So for me, it will have a bit of an impact. People will be disappointed, but no big deal.
And what about URNM coming to Europe? Is that a likelihood, do you think? Brandon, I'll just stick with you.
Well, that's far more relevant, that is. So it's just a shame that big news is overshadowed by SPUT and New York Stock Exchange. So as most people might know, Sprott Group has now completed the takeover of URNM. That's an ETF. That's the fastest growing ETF in the uranium sector, focused on pure play uranium companies. And by listing it on London and having access to European or capital, that's going to have a far more direct effect, because that will push more capital onto the register of companies like ours and everyone on this panel.
Right. So we're looking at ASX companies here. When you're in the US, your assets in the US, but you're an Aussie company. How important are exchanges that the exchange that you're listed on for uranium companies at the moment, or does it not really matter?
I think the uranium companies move quite in sync, whether you're in Australia on the ASX, or if you're in North America on the TSX or the NYSE or another exchange. I think for SPUT, the move to the United States listing, while it seemed important, can't and the failure on that listing because of technicalities can't be overshadowed by the fact that they've been hugely successful in raising money and acquiring uranium in the vehicle that they have now. They have a Canadian ATM facility that will allow them to raise another $30 billion before it's exhausted. They've bought over 37 million pounds, and they have, and spent about half or an equal amount of money on the way up. They've impacted the market tremendously, the spot market, and their ability to do that is not going away anytime soon, just because they haven't achieved a U.S. listing. In fact, I think you're going to find that at the end of the day, U.S. investors with an interest in this vehicle have full access to it via the Toronto listing.
And Siobhan, 92 Energy, you're the new kid on the block. Well, the company is. You've got a lot of experience in the space. But when you're sort of listening to these sorts of conversations, does it impact or affect your decision making, or is it just you've got to get on with the business of finding uranium?
Oh, look, absolutely. We still go back to the fundamentals in the market when we're looking at what we think our view of the market is. Of course, SPUT has come in and impacted that, but you've got to look at the broader stories around decarbonisation, energy security, and what's occurring around restocking and overfeeding in the markets at the moment. These are all having a tremendous impact on the market. And as Brandon rightly pointed out, the listing on the New York Stock Exchange really is the icing on the cake. So it's not something that's necessary. All those funds are still coming into the market. And I think it's important to note that 15 million pounds of uranium have been bought this year. That's equivalent to the largest mine that we've got in production at the moment, what their annual production is. So, I think there's still that avenue to be able to go in and invest in SPUT and lots of funds to be able to come in.
And so, Brandon, you've been at the WNA this week in London, and you referenced earlier saying obviously maybe retail might be disappointed by the fact that SPUT has been declined to be listed on the NYSE. What is industry concerned about? What are the conversations that have been had this week, and what should we be looking at and interested in?
Well, if I try and draw themes out of the 3 days of discussions that I've had, the biggest theme that industry is talking about at the moment is security of supply. And that's being affected in a very immediate sense. There's a lot of concern about impact of potential government sanctions, but also self-sanction, and the potential for customers of electricity companies to really push back on some of their Russian dealings and Russian supplies. Russia supplies 40% of the world's enrichment. So if that supply becomes unavailable, that has a large number of quite profound cascading effects, even in the short term. Now, you bring that back out into the broader term, and what this war in Ukraine has done is it has reminded everybody, both government policymakers, but also utilities, that energy security is one of the most important considerations that an economy can be based around. And that just got forgotten in the wake of Fukushima. And most of the focus, of course, is on gas, because that's reliance on Russian gas has helped to precipitate this crisis. But it's clearly flowing into nuclear, because nuclear power has, I believe, the greatest and most effective credentials when it comes to enabling a sovereign state to secure its energy supplies, both in terms of the reliability of the commercial price over a long period of time and its resistance to fluctuations from crisis and other events, but also the fact that it's highly feasible to stock 5, even 10 years of your nuclear fuel needs inside your border, where you can secure it, protect it, and monitor it. You can't do that with any other energy commodity.
I mean, so Wayne, if I think about the sort of language that was used in conversations that we had with US producers and developers in the last couple of years, it's been quite combative, adversarial in nature. Turns out, rightly so, given what the events of in Ukraine recently. What are the sorts of conversations that you're now having in the US? Because you're US-based, US asset, albeit an ASX company. Has that helped you in any way, or people knocking on the door now?
Yes. Well, the door is wide open, Matt, and I think that's really now it's incumbent upon folks like Peninsula and the other U.S. developers and wannabe producers to walk through that door. The door that's open is a long-term market, contracting opportunities. We've reached out to quite a few utilities, and our outreach has really led us to understand now the action is off market. I mean, we're used to responding to requests for proposals from the utilities when they come in on occasion, and quite frankly, there were quite a number of utilities who in the past would say, I'm not really that concerned about where I get my uranium from. I need to get it from the least expensive source, period. So if you weren't that least expensive source, you had a little bit of work to do. Today, you still have some work to do, but the sensitivity to diversity of supply, the sensitivity to the opportunities that the U.S. government is promoting through, supporting at-risk nuclear reactors with some of the bills which are before Congress. Those bills suggest that to get the greatest funding and support, you buy domestic production, domestically produced nuclear fuel, and the more components of domestic fuel that you have in your supply, the greater support you'll get. So if you buy uranium, that's a plus. If you buy U.S. conversion, that's a plus. And if you can get the enrichment component as well, then you're going to maximize your opportunity with the U.S. government. So the utilities recognize that. And today, a phone call will get you, yes, we'd love to talk with you about your capabilities and what supply you could bring to us.
And Siobhan, what does it do for someone at your stage? You're very early stage exploration, but does it change your thinking in terms of where the end point is? Because where you are, you're drilling, you're raising money, you're drilling, you're raising money, and you're building out that story. But does it make it easier to get capital? Do you have a better understanding of where that capital comes from as a result? And as I mentioned, the end game may be slightly different now.
Look, I think from our perspective, the end game is still just looking at the basic fundamentals of the market and the gap between the supply and demand. And that still exists. The security of supply obviously makes Canadian and American assets, something that's far more amenable to US utilities. So from that perspective, it's certainly changed, but it's also put a really positive spin on uranium and nuclear as a source of fuel, and really shifted that conversation back to sensible conversations around how you produce that energy in the market.
Okay, and look, and I think we should probably sort of try and work out what the challenges are that each of you faces kind of going forward. But I can't help but note the slight change in narrative between it used to be, it's Athabasca, North America versus Africa, and on here we're lucky enough to have representatives from all three. So for you, Brandon, has this changed the narrative for you? Is it an easier conversation as a result of events in Russia in terms of getting noticed? I know you've got the OTC listing, but what are you seeing?
Look, most definitely, particularly in conversations with utilities. African production was one of the themes coming up over the last 3 days. And if I give you an example, the CEO of Orano, the large French major, he used his opportunity on the stage to emphasize that it's a vital part of Orano's strategy that they have a three-legged stool, which is production from their Kazakh joint venture, production from their joint ventures in the Athabasca, and he really emphasized the importance of Africa. And he spent about 5 minutes in a panel discussion talking the room through why African production was an absolutely vital third leg to that stool. And really what it means is that they can offer production to anybody. And Namibia, and in their case, Niger, is very important from that perspective when we start to see the potential for bifurcation in this market, because Namibian production is sold and very well received in US, in Europe, in Asia, but it can also continue to be sold to the biggest player in the game going forward, which is China, and any other countries that might find themselves confused as to which side of that bifurcation they fall. So Namibia can sell to any producer of commercial nuclear power in the world. And that ability to swing, if we continue to see geopolitical tensions increase, positions African production in a very special category. And that's becoming better recognised and accepted in the industry.
And so, so hopefully in terms of the narrative, it stops becoming a sort of squabble internally. People say we're better than that guy over there, and realize that we need all of the above, right? And hopefully the market recognize that, investors recognize that. But for you, Wayne, in the US in particular, which has obviously significant needs, not a lot of production, the US is going to, and the utilities, and maybe with the US reserve, are going to need to find friends in terms of that supply coming down the line. But what does it do for you now, though, in terms of access to capital, in terms of demand for expediting things? You have obviously been solving some technical components to your story. How do you move things forward quicker? Can you move things forward quicker as a result? Does that involve M&A? Where do you go with this?
No, well, we're certainly in one of the best positions as far as a rapid restart goes. We have, for a long time together, talked about the technical facets of the Lance project, but in the last several years, we've now feel that we've put that to bed. We worked on technical de-risking. We've done field demonstrations. We've talked about the results along the way and the challenges along the way, but at the end of last year and into the beginning of this year, we concluded our technical demonstrations of the upgrade in technologies that we're putting into Lance. And now we're transitioned into completing a feasibility study and looking at which we expect to have out within a couple of months, probably by the middle of this year. And then we're really looking at where does the funding come from. The markets today, with the spot market up as it is, really are supporting the uranium developer community, the uranium exploration community, and all of these need the support. The explorationists who've been starving for funds for the last decade, today can go out and raise some money to find big new deposits, which the world really truly needs. But today, we can find the money in the markets if we were out looking. We haven't been active in that because we've been very deliberate in our approach to things. We did the technical de-risking and the regulatory de-risking. We have that in the rearview mirror now. We're finalizing the economic analysis, and then we'll make that go decision. And we're very confident in today's market that the funding to go ahead is readily available.
Siobhan, I always think with company CEOs, that one of the most frustrating things that they have to face is they don't get to take the project all the way down the line because someone comes and takes them out. M&A. I think M&A is going to be a big part of this marketplace. And if you're a buyer of the idea that we need all of the above, I think there will be some consolidation of some of the better assets. So, what are the challenges that you think you face in today's market going forward?
Look, I think as an explorer, the challenge is really around exploration success. So provided that you've got that success coming through, challenges become fewer, and then you're just dealing with broader market issues. Obviously, the spot price is something that on the day-to-day flows, everyone's paying a great deal of attention to. But it's interesting, 12 years ago, we almost ignored the spot price and we just looked purely at long-term contracting prices. And I think you'll see the market start to turn back around in that direction a bit more going forward. And perhaps Wayne has a bit more experience with that himself at the moment, but certainly 12 years ago, that was the case.
And let me jump in. We have this this discussion now open about differentiation between the spot market and the term market. And I think that's something that we really have to, recognize. Almost always in the history of the uranium market, the term market leads the spot market in pricing. The term market is there, with pricing that incentivizes long-term commitments to the supplier. That's what term is. It's a long-term commitment. A producer is going to commit a component of their supply, and they're going to get a premium for that commitment. Today in the markets, we see the spot market leading the term market. The spot market transactions are almost fully characterized by the financial community activities. And the term market today is where the producers and the consumers reside. So when we look at what's well and truly going to support a project, we have to first look at the term price. And today the term price is about $5 lower than the spot price. It's been trending that way, and that's an anomaly. We need the markets to levelize, to get back to normal and see the term markets ahead of the spot market rather than the converse.
Absolutely, and it's interesting. Again, for this is meant to be a session for people new to uranium investing. So, just in terms of the utilities' behaviour at the moment, they've always been a sort of like an enigma in terms of their decision making, and it's opaque is the word we've always traditionally used with them. Is how does their decision making change, Brandon? The world has changed dramatically in the last year for them. We've seen spot market rise, and that's what retail look to. The guys in the industry, obviously, as Wayne says, are more focused on term prices and those sort of term contracts coming out. How has their world changed? Will utilities start to move this year? We've been calling it every year for the last 3 years, but nothing's happened. Is anything going to happen this year?
Well, the behavior has changed to a degree, but the mindset has probably changed a little bit more abruptly. And if we go back a few years, particularly for people new to this sector, over the last several years, there's been an oversupply of uranium where the utilities could continue to top up their requirements in the spot market. And if not in the spot market, they would use traders to facilitate short-term buying through what's called the carry trade or the midterm market. Now, where I've seen a very abrupt change in mindset is the understanding that because of the volatility in the spot market caused by the financial community, the utilities realize that those days of topping up are gone, and they now need to put in place long-term contracts over 5-10 years. And in the last few days, for example, I heard the same phrase mentioned in slightly different ways about 4 or 5 times, and that was the financial community has ensured that the spot market is no longer a source of supply for utilities. Now, the thing is, as Wayne points out, the term market has traditionally traded at about a 20% premium to the spot market for reasons of security of supply and certainty. It's lagging at the moment, but that's not surprising. And if you go back over, say, the last 30 years, whenever there's been an abrupt increase in the spot price, term has lagged. And that's simply because writing a term contract for most utilities will take them anything between 2 months if they're regularly writing contracts and going to a customer that they've just been dealing with, anything up to 6 months and beyond. If that utility hasn't done a term contract in a while, they've got to get their documentation together. They probably have to go to a wide panel of potential suppliers. So the other thing when you talk about the behavior of utilities is my observation is they're still trying to figure this out right now. They're still trying to understand, are these sort of prices the new normal? Are they an aberration? Are they setting a base for even greater price growth? They're the questions going through the minds of utilities. And until they start to feel more confident about those, I think they will hold back for a few more months on engaging in term contracts. And that's probably where we will see a continued lag into potentially the end of this year.
I think Brandon's really got that. We're in a period of price discovery in the term market right now. It's actually not responsible for a producer to sign a term contract when the spot market is offering more money. Why would you commit long term your production at a price that's 5% less than, or $5 less than what you can get in the spot market. So when I said that, we need to see that normalize, I didn't say that it wouldn't. I really meant to imply that, we're in a period now of price discovery in the term market. And the spot market, with all of the financial activities and the trades between, the financial community and the traders, is well ahead of the term market right now. But the term market will play catch up. We'll get that price discovery, and you'll see more and more contracts once the pricing makes sense.
But I noticed that I think the IAEA are suggesting that utilities are sitting on about 16 months of inventory at the moment. I think typically we've talked in the past of needing 2 to 3 years worth. Have they been sort of asleep at the wheel over the past couple of years? I mean, why are they letting inventory levels run down like this? Wayne, I mean, you may be having more conversations with utilities than others.
I'm sorry, who's responsible for running the inventory?
Well, I'm saying there was something that came out of WNA this week from the IAEA suggesting that there's only utilities are running on average about 16 months worth of inventory at the moment versus a recommendation of like 2 years, 2 to 3 years. So are they asleep at the wheel?
Well, no, they've fully taken advantage of the past markets where they could top up, from the spot market, with ease. The challenge of getting a term contract in the past was that the spot market was cheaper. Today, with the term market cheaper, they're certainly, interested in more longer term commitments. But the utilities, just like this set of CEOs, is responsible to a set of shareholders, and the fuel buyers were responsible to those shareholders to acquire uranium at the lowest price that they could. They're less responsible to the shareholders to pay up for security of supply, and that's changing now. That's the dynamics that is changing, is that security of supply and longer term availability of supply is now come into focus with the financial sequestering so much of what was mobile inventory.
Right. It's interesting. And so, remind me, what's in terms of the total operational costs? What does the uranium component comprise of as a percentage, Brandon? Is it, in terms of the ongoing operating costs, uranium is not a big part of this, is it?
Even in a mature uranium market like the US, where reactors the capital cost has been paid for a long time ago, and they're looking to extend reactors to 80 years. Typically, the uranium component is between 8 and 10% of the total cost of electricity. So you go to a less mature market where a large proportion of that electricity is capital costs associated with development of the nuclear power plant, and it's even less. You compare that to gas or coal, where it's the vast majority of the cost of power is that marginal cost of the fuel. And that helps to explain why nuclear power has been recognised as being such a commercially reliable and resilient source of electricity around the world.
Okay, so we've covered a lot of the macro sort of stuff. I want to kind of get down into this nitty gritty again. For people new to this, I want to sort of at least headline a lot of the things that you guys think about. Siobhan, I'm going to come to you. You're at the beginning of the process here, Explorer, in Canada, and some of the more topical conversations at the moment are along the lines of you go woke, you go broke. We've got ESG. We've got all sorts of influencing factors outside of what you want to do on a day-to-day basis, which is go and make a discovery and grow your business. How are things like that affecting you as an explorer? Those sort of external pressures.
Oh, well, I think with ESG, you've always had that social license to operate. So really, I don't think too much has changed over the years. You've always got to pay attention to your environment. You've always got to pay attention to, all the people in the area in which you're operating. So not much has changed there. So we're always paying attention to that. That's always been part of the way I've operated, and it won't change. Of course, we're cognizant to it and we talk about it more with investors these days, but From my perspective, it's really important to get that stakeholder engagement from the very beginning, right at the exploration outset.
But how does all that reframing conversation affect you? I mean, does it cost more money? Is it more expensive to have this reframing of the conversation of things that you've always traditionally done?
I mean, look, sure, it adds small amounts of cost, but, you're getting inflationary pressures from every way and direction at this point in time. So, it's nothing unexpected. And then of course, you're operating in an environment with inflationary pressures. That just basically means that your term contracts need to go up to, make a mine. So, yeah, I mean, I don't think too much has really changed in that sense.
Okay, but sticking with you as an explorer, obviously, but Wayne can talk to us about the inflationary pressures, maybe driving the change of required in terms of the price that these guys need to get. But for you, in terms of the inflation affecting cost of materials, in terms of drill rigs, in terms of personnel, and so forth, is it making it harder to do your job than it was previously? Are things potentially terminal for explorers in this current environment, or does it all kind of level out eventually?
I mean, it's not something that we've struggled with. We've got very, very good suppliers that we work with, and that's through having an established team who've worked in the basin for many years. So that's not something that we've really come across as terminal, but sure, it might be an issue for other explorers out there who perhaps are new to the market or don't have those suppliers at their fingertips. But it's not something that we've encountered at this point in time.
Right. So basically the cost of finding pounds in the ground is the same as it ever was. I mean, i.e. business has not really been greatly affected, but you're sort of cognizant that inflationary pressures, will come to bear at some point further down the line. Is that how you're looking at it?
Yeah, and I mean, I think really the point is markets are open at the moment. So the ability to raise money at this point in time is far easier than would have been, say, for example, 5 years ago, when the markets were essentially shut to uranium explorers, and that makes a big difference. And that's probably more important for explorers to be successful than inflationary pressures, for example.
But you do need the kind of liquidity that retail brings. But there's a kind of disconnect between the thinking of, as you say, that there's money available to companies at the moment institutionally, but the retail are a little bit more guarded. They're kind of protecting their themselves by, hoarding cash, behaving differently, and we've seen that in the marketplace. There's been this withdrawal. I mean, Brandon, even uranium companies have not been immune to the effects of the markets of the last 3-4 weeks. So, do you think that retail will, soon work out that actually it's going to be okay, or do you see a sort of long sustained period where perhaps they're going to be a little bit more cautious with where they put their money?
Well, as you point out, uranium does march to a different drumbeat, and it does have some very heavily defensive characteristics. And I'll come to those in a moment, but it can't fight the winds of a market downturn if that's what we ultimately saw. Now, as to the defensive characteristics, that's something that was discussed over the last couple of days as well. And it's interesting with the COVID disruption to energy supplies. We saw such incredible disruption that oil went negative. Coal didn't even move. And yet the consumption of uranium through nuclear power, even in the most affected markets, dropped by maybe 5 or 10%, such as France, where there's a very heavy reliance on nuclear power. Now, that's for a very good reason, because when you've got all of this investment in a nuclear power plant, that's the last thing that you turn off for the reasons we've been talking about. And so, therefore, a uranium investment has a very heavily defensive characteristic, because those reactors are already built. No matter what happens in the world, if we did face our worst fears in terms of global recessions, those reactors will just continue to produce power. And the uranium story is still predominantly a supply-driven story. Demand growth, which looks really exciting now, that is just a bonus. The fact is that there's been such a lot of underinvestment in this sector that just with the baseline of all of the nuclear power plants around the world and their provision of 10% of the world's electricity, there isn't enough uranium, and that's what drives the macro. So I think over time, you'd see bigger money come into the sector for its defensive characteristics, which would then lead retail.
And what about you? Obviously, the US is a big retail market there. It's advantageous to be in the US, but with the are US investors looking at you as an Aussie company, Wayne, or do they kind of see you as one of their own? And and how can you help yourself in that market? Can you take advantage of that?
Well, we certainly are regarded as a U.S. producer, with Australian ownership, and it is advantageous to have the assets and the production assets in the United States, a very stable jurisdiction. So we are able to play in that sandbox very well. Our production is flagged U.S. domestic production. It's not flagged as Australian production because we're an Australian company. So thank you to all of our shareholders in Australia who support this. But I think it gives us a key advantage actually now in the market is that in respect to the universe of Australian listed companies, we have the opportunity to, fully function in the U.S. markets.
And if I look at obviously 3 years ago, trying to invest in different exchanges was horrible. It was not easy. It's got easier. People are doing it from their armchairs on their phones. Mm-hmm. It's made life a lot easier. But for the companies, we've seen Aussie companies get OTC listings, go to Frankfurt, and even on AIM. The cost of that used to be quite prohibitive. But do you see more of that happening as the world sort of this kind of the utility on your phone being able to cross the border? Is the cost worth it? There's
definitely been an adoption of the OTC markets. It's not a formal listing, and it's wrong to say I'm listed on the OTC. The OTC is a trading platform, and we moved to open up trading on the OTC for Peninsula shares, and that's been hugely received with great volumes. As a junior uranium company, we have very enviable volumes on the OTC trading platform. So more and more companies are finding it's very cost effective. It doesn't have the regulatory compliance burdens that a full listing has, and it gives North American investors, in my case, the opportunity to participate in this Australian-owned North American producing asset. So the OTC markets has been a really good evolution, and it's really come on strong. You see more and more companies doing this across different sectors, but it's you can also see almost full participation amongst the uranium sector.
And as a percentage of your liquidity, what does it equate to?
Well, we trade about a quarter, 20% to a quarter of our shares.
Wow.
We might trade 1 million shares a day on the OTC and 4 to 6 million shares a day on the ASX.
And Brandon, you've got the same, haven't you? Same sort of setup?
Yeah, we're doing a bit over 1 million shares a day on the OTC, which represents over the last 12 months 15% of our total volume.
Okay, Siobhan, any plans?
Yeah, well, look, it's actually something that we're looking into at the moment. Certainly, it's something far more palatable to us than a TSX listing at this stage due to the compliance around a TSX listing. So anyone who's ever run a dual listed company between the ASX and the TSX would know that the compliance costs as well as effort that goes into that compliance are really quite substantial for companies. So the OTC listing actually enables companies to have this sort of quasi listing overseas without those huge compliance issues around them. So yeah, it's certainly something we're investigating at the moment.
Okay, well, guys, I think it's a nice introduction, but I'll let you each kind of sort of wrap up where you think, beginners, newbies in the world of uranium investing should be focused? I mean, Brandon, what are the things that you would point people to in terms of needing to understand about investing in this space?
Well, the first thing is uranium's a bit different to investing in other commodities. The knowledge and experience of a management team is extremely important because of the very particular risks that you have in uranium. It's a small space and there's only a limited number of quality companies that you've got 3 of them well assembled here on this panel. And the importance of the operating environment cannot be underestimated in uranium. There are so many operational hurdles, and that's where being in an established jurisdiction such as Namibia, Wyoming, or Canada becomes vitally important to an investment thesis.
Wayne, what do you think? What do you think?
Look, uranium may just be entering the start of a very long super cycle. You've got to look back. If you're new to uranium investing, you have to understand that uranium cycles are generally not quick ones. I've enjoyed one, and this might be the start of the second super cycle in the uranium space in my 30-year career. 30 plus years. So I'm really excited about where the uranium markets are today. This is just the beginning, and various people speaking in various sets. Some say it's the second inning, some say it's the first inning, but we're a long ways from the end point of this cycle. And uranium priced at $60 a pound is merely where it was 11 years ago. Or 12 years ago. It's been much higher. So get ready for the ride of your life. This is we're going to go up and down a little bit, but I see more up than down in the coming years.
Siobhan?
Yeah, so I completely agree with what everyone said. I think it's going to be a very long cycle, and it's probably going to be one of the better cycles that we've had. I'm super bullish on the fundamentals, which is why we initially got into this market in the first place. And, there's so many good things going for it. And I think we just need to come back to those fundamentals around the supply story and the demand side of the story with decarbonisation and security of supply. So we're in a good place right now.
We are indeed. And look, we'll wrap it up there. And I'd say to anyone listening, watching this at home, also look for companies with strong fundamentals like these 3 companies: 92 Energy with Siobhan Lancaster, with Peninsula Energy with Wayne Hiley, and of course Bannerman Energy with Brandon Monroe. You can't go far wrong with these guys. Appreciate your time today, guys, and we'll catch up with you soon.
It's been a pleasure. Thanks.